Hey, good morning, good evening, everyone who's joined here. Let me start with a question that might make you uncomfortable. If I ask you right now for a cash on cash return on your best performing property, could you tell me what it is? What about NOI margin, net operating income margin? What about a true total ROI, including appreciation and principal down payment? If somebody asked me these questions about 15 years ago, I was clueless. But I have learned working with many real estate investors, 80% can tell their gross rent, which is like three times their 3,000 times 12, 36,000 gross rent. That's 80% of them can say that. Maybe 50% know their cash flow, what's in and out, but less than 20% can accurately calculate the six metrics that actually determine whether their portfolio is truly profitable or not. Today I'm going to share the six KPIs. Hey Kira, welcome to the webinar. So we're just getting started, so let me get started. Kira, thanks for joining, and everybody, thanks for joining. So let's get started. It's about 5 minutes already, or 10 minutes into it. So, good morning, good afternoon, wherever you are, to everyone. Let me start with a question that might make you uncomfortable. If I asked you right now for cash on cash return on your best performing property, could you tell me that? Right? You may be able to tell. You're a power investor. What about your NOI margin? Would you know that? Or what is your true total ROI, including appreciation and principal pay downs? So if somebody asked me these questions about 10 years ago, I wasn't sure what they were talking about. And since then, I've been working with many real estate investors, and I can tell you 80% can tell their gross rent. It's like 3,000 per month, 12 months, so 36,000 is my gross rent. 80% can tell that. 50% may know their cash flow, but less than 20% can accurately calculate the six metrics that I'm going to talk about here, which truly defines the portfolio profitability. Today I'm going to show you exactly those six KPIs which separate successful investors from those who think they are successful, and more importantly, how to track them effortlessly using Rentastic. I'll send a copy of this presentation so that you have everything handy and you can go do some of the homework that is at the end of the webinar. So, what are the six KPIs? The six KPIs are net operating income or operational income, NOI, which kind of looks at the profitability of your portfolio, of your property in question. The next one is cash on cash, actual cash performance, which is targeted towards like 8 to 12%. I'll go in depth on each of these. Um, Cap rate, which this is context dependent. I'll talk about what the context means and what what it means by market positioning. GRM is a rent multiplier. So if you're getting some rent, what's the multiplier, which is a good from a standpoint of good investment. CFPU, this is cash flow per unit. This is something that we can look at how you can scale, which type of properties you can scale and such. And the last one is what's your wealth building? How are you building your wealth? Because it's not just about cash, it's about the wealth. gives you a complete picture, and some of those suggestions are industry standards for a very good portfolio. Cool. So let me go into the first KPI, which is net operating income or NOI. So what this is, the formula is gross rental income. Let's say we will go into an example, minus all the operating expenses excluding mortgage payments. This is kind of important. When you exclude the mortgage payments, you are not factoring, you're factoring only the ones that are manageable expenses. Mortgage is something that you have to pay, right, in most cases. So this shows the true profitability before financing, and it also gives a value of the property, which I'll talk about when we get to cap rate. So NOI divided by the cap rate gives you a true value of the property. Typically 50% is a good place to be, but if it's less than 40%, you want to look at why your NOI margins are less. What's NOI margin? NOI margin is, here's an example. I made about 36,000 annual income. That's 3,000 a month rent, 36,000 annual income, but my NOI was 9,000. So at the end of the year, I had only 9,000 remaining. So that means I spent 26,000, that is 25% margin. So typical margins are 50 to 65, and now I am at 25% margin. This is a problem. This is a true case study that I went through. What we looked at was how can we improve the NOI. This means there are two sides to it, right? The numerator is the income, the, the and the expense, and the target is basically the numerator is the income and the expense is the denominator. So let's see what this is, right? So if the income was 6,000 and if the income was 9,000 and I had an if the NOI was 9,000 and I had an income of 36, I'm at 25%. This is the context. So we looked at, is there parking fees that we can charge, right? This is a downtown apartment condo, so I could potentially charge parking fees. Um, is there on the expense side, can I look at preventive maintenance because I got stuck with a big air conditioning unit change bill, or insurance shopping, is am I paying too much on the insurance? So try to increase the income, reduce the expense so that the NOI becomes more. Rentastic provides a profit and loss report which gives you real-time NOI. I'll show that um, as a demo in a little bit as we finish all our um, as we go through all our KPIs. So now I'll go to the next one, which is the cash on cash return. This is all about cash flow, all about having cash at the end of the year from the investment that we have. So total cash flow by total investment. So total investment is a very interesting thing where, let's say an example is I made 6,000 at the end of the year. I'm keeping numbers simple, and total cash invested is 60,000. So one of the key caveats is, or mistakes that people make is, we don't really consider what was the total investment. It could be down payment plus closing costs plus renovations that went into it. So you need to account for all this. Let's assume that is 60,000. So now the cash on cash return is 10%. 6 over 60 is 10. 6 over 60,000 is 10%. Then we're looking at a pretty good performance from a cash perspective. But if we ignore, if we take just the gross rent into account, we're not doing the true cash performance. If we ignore negative cash flow months where it was not rented out, we are not really looking at the true cash performance. So this is a good metric to look at. So we've looked at NOI, we've looked at cash on cash. Let's go into the cap rate. So this is the capitalization rate. This is a interesting metric from my standpoint because it compares how my properties are doing in Dallas, in Austin, in some other place that we might have. So it kind of gives you a compare and contrast, and it also looks at, is the property appreciating very fast, or is it just an income generating property and the market is pretty stable. So an example here, when I was working with one of my customers, is they had a 2% cap rate, which in Rentastic we flag as pretty low cap rate because we want to be in 4 or 6 or 8%. But it's not, you don't want to look at these metrics in isolation. 2% cap rate is okay in this case because in the last 6 years their property had appreciated by 200k, which is quite a bit. When we look at the total ROI metric, it makes a lot of sense. But looking at the cap rate in the holistic picture makes sense. If it's too low, you want to make sure you can actually you can look into it and see how you can increase it. But if the property is appreciating like crazy, which is great for you, um, this cap rate really doesn't matter, right? So I'll show you that in Rentastic where you can look at these metrics as we go into the demo part of it. So the next one is gross rent multiplier. This is a pretty easy metric. Let's say your property price that you paid is 300k and you're making about $3,000 a month. So that's $36,000 a year. So when you do the GRM math, it's nothing but 36,000 by 300,000. So it's 8.3, which is basically called a multiplier. So you get an annual gross rent of 36,000. You to It takes 8.3 years to get back what you paid for, right? So that's kind of what this means is GRM, which is not there in Rentastic today. I will be introducing this, so our team will be introducing this soon. You will see this in the properties that you have. So if it's 8.3, you're doing pretty decent. It's a high appreciation area, so it's good. But if it's less than 4, you want to look at it. Am I charging too little rent, or is my property too expensive? Right. So that's the GRM part of it. If I go to the next one, which is the fifth one, we've gone through NOI, we've gone through cash on cash, cap rate, gross rent multiplier, so cash flow per unit. This applies to mostly if you have multifamily units, if you have duplexes where there's 2 units, or if you have single family unit, if you have multiple of them. It lets you know which property type, like say a residential rental versus commercial rental. You can kind of now compare and contrast to see which one is giving you better cash flow. Where do you want to expand if you have liquidity? Where do you want to go into? Those kind of things. That this is for mostly for scaling your property portfolio. So, and also determining which one's giving you more money for what you've invested. So it's annual cash flow. That means if you were in Rentastic for a year, it's easy to compute this by the number of units. So annual cash flow by the number of units. So if you have annual cash flow of 10, like 100,000, you have 10 units, the CPFU is basically 10 is what you can say. 1,000 is what you can see. That's a very high CFPU. Sorry, CFPU. So this is a math that you can do, and the Rentastic already does it for you based on what you already have. So the last one, this is where its wealth building component comes into play. Do you know your total ROI? This is very important with long-term goals that you might have, um, where you're looking at total investment that you put in, annual cash flow, total income that you have, annual cash flow, appreciation, principal that you've down paid already, um, divided by the total investment that you have in the property. A simple example is I have 6,000 annual cash flow. This is just the rent after all the expenses. The property is appreciated by 15,000, which is pretty good. 4,000 is what my principal has reduced by, right? And then that the annual return is 25,000. It's a sum of the three that are above, and total investment is 75,000. This is what your down payment plus closing costs plus any renovation, any property repairs, all those. So if you do the math of 25 by 75, you're at 33%, which is pretty good. If you're there, you're already doing very well, right? So in today's market, total ROI often is 2 to 3 times the cash on cash. So let's say the cash on cash is 10%, your total ROI is three times that or 2 times that. So you can do the math there, and this is all about knowing your finances, knowing how your properties are doing. So these are the 6 different matrices or in KPIs, key performance indexes, that you can actually keep track of using Rentastic, and basically go even to an investor and say, hey, this is my portfolio. Can you give me? I'm planning on investing in a few more. So can we look at how you can fund me, that kind of stuff, so you can have much better discussion. So that's the KPI. I'll show that to you in the product in a little bit, and also summarize it towards the end. So how does Rentastic help, right? This is where Rentastic comes into play. A lot of people who don't use Rentastic have basically spreadsheets and whatnot and doing manual calculations, which is error prone if you don't use the right formula, and they're usually looking at a negative cash flow after it has happened. So with Rentastic, you can track all these KPIs every so often, like look at it every month and start making decisions if you need to. If you were a premium member, you also have profit and loss statements, cash flow reports, which basically tell you how the NOI is breaking down, where can you look at increasing your NOI, increasing your income, reducing your expenses, all those. There are a few tools that I'll show you also. A deal analyzer, which is something that I love using for any investment that I want to go into, any market that I want to look into. It's right there at your fingertips, and then you can export the data from Rentastic and take it to a investor presentation and say, hey, here's my portfolio, here's how I'm managing it. Look at the numbers, and let's let let's look at a loan for 100K for my next down payment, right? So that's the kind of things that you already have at your tooltips, at your fingertips. Cool. So let's jump into a demo to show how Rentastic is useful, how where the KPIs are, how I can track to it, and all of those. So as you can see, I've pulled up Rentastic. I have my July income, July expenses. It's showing me some of these high-level insights. But where are the KPIs, right? They're not on this page for sure. So let's go into the properties. So I have 4 properties here that I manage as a part of this account. So if I go into the first property, here they are, right? The NOI is right here. So I have about 6,000 NOI. This is in the last 6 months. So I'm not tracked the whole year. I have a cap rate of 1.75, which is flagged as red because it's low. But look at the numbers here, my purchase price versus my market value. I have 210K in the last 6 years, so it's pretty decent. So I'm not concerned about the cap rate, but I'm concerned about the cash flow per unit because it's kind of low. I don't even have the minimum, which is like 250. So I need to look into my income expenses and see why they are so low. So look at the parts where I'm paying more and things like that, and start making decisions. So let's go into another property which I believe is doing a little better. So if I look at this property, I have a better NOI, I have a higher cap rate. It's still not there, but I have 185K in equity. If you look at the purchase price and the market value, and but my cash flow per unit in this case is pretty decent. It's 1 unit. It's giving me pretty decent cash flow, right? So these are the two things that I wanted to show you. One thing I want to also harp on is I'll go to this property and it's showing me all zeros. Do you know why? Because I have not wired my bank account. I have not categorized my transactions, and hence I don't know anything about this property in terms of metrics. This is where most investors are. The 80% that I was talking to, they don't know about their property. They're running blind. So if you want to go into your transactions, make sure there are no uncategorized ones. Categorize them. Of course, you need to have your bank account wired and categorized, and make sure these are already all clean. So next I want to go into the deal analyzer. This is where I was talking to you about the metrics that you can see live, uh, looking at do I have I made a good deal, or if I'm going into a good deal, am I getting into a good deal? So I have been looking at a couple of these properties to look whether I'm making a good deal or not. If you look, some of these things are showing, but the, the true value of the property right now listed is 450K. Once I plug in that and a closing cost about this is an average of 1.5% closing cost, I have a repair cost of about 15,000. I already know this because I have to change a bunch of things. So once I start adding all those, you see how these things start getting red. I cannot get this much rent. I did some market survey. Right, and I'm going to get this rent. So now when I plug in these numbers, all my KPIs start bleeding. So I'm on a negative cash flow per unit, negative cash on cash return, pretty high cap rate, which doesn't mean much because I'm paying too high. And the 1% rule, which we did not talk about, is very simple. If I invested 60,000, am I making 1% of that in rent? Right? 600,000. Let's say I invested 600,000. Am I making 6,000? If I invested 100,000, am I making $1,000 in rent? So in this case, I don't think it's a great deal. But if I can negotiate it to 400,000, right, and have some contractor do my repairs for 10K, and kind of get about 3,500 in rent, now I'm talking a lot more greener items here. Now I can save this and say, you know what, this is a good deal. I think I should be doing this, knowing fully well that the cash on cash is kind of low and the rent will appreciate, and the house already has an equity of 50K because I negotiated it down, and maybe this is a good deal here, right? So, and things like rent estimate is something that I would use, right? I would check, hey, am I charging the right rent? In this case it says 3240, but if I go back to my properties, the rent here I'm charging is 3,000, which is close enough, right? So you can do the rent analysis and make sure it's good, and then you can even look at the properties that you own and do the rent analysis, right? So these are tools that you have at your disposal. All right, so that's something quickly I wanted to show in the product that's already available. In terms of the KPIs, the total CPU, total ROI is something that you can do on your own, provided you have all the data that you are aware of. This is something that's important as well. You need to have all these data entered. If they're all blanks, then we can't do much on the KPIs. We can't compute it because you've not provided the data for us. Right? I'll stop with the demo, go back to the slide deck. I have a few things to circle back. So How am I making smart investment decisions? Before tracking these KPIs, before being aware of these KPIs, should I buy a property? This property is a question. It's a gut feel. It looks beautiful. It's good. It's clean. Let's go buy it, right? Is this property performing well? I bought this a year ago. I'm being collecting rent. It's looking good, right? Maybe not, right? So, which property should I sell? This is an emotional thing for me for a long time. But when you put your emotions aside and start looking at the KPIs, if I'm making an acquisition decision, are the cap rates comparable? Compare the cap rates with what you have or what's around there, right? And look at the GRM. What is the multiplier? If it's 7, 8, 9, 10, I think you're in a good shape. So projected cash on cash. What am I expecting as a cash on cash? So these like the metrics we talked about, right? So look at low NOI. That means I need to invest my time in making the NOI higher. This is the portfolio optimization that we need to do time and again. Portfolio strategy is focus on the property types that are giving you the highest cash flow. Are there properties like retail rentals are giving me better cash flow? Look into those, right? So, and when do I exit? Again, this is extremely emotional for many people. When your ROI projectile or ROI projections decline, total ROI. I had an ROI of 33% last year, now it's 25. That's a huge decrease. I need to start looking at why I'm still owning those. So I had two investment properties. So there's one that was giving me 12% cash on cash, which looked awesome, right? But 2% total ROI, which was really, really small. So property B was giving me 6% cash on cash, but 25% ROI, right? Now, which one would you choose? Is it property A with 12% cash on cash, but 2% ROI, or 6% cash on cash, but 25% ROI? Remember, our total ROI is the wealth building component. So I would choose property B because that's the real winner due to appreciation and principal down payment. So that's something that you wouldn't have done because if you loved your property A, you would keep that and sell property B, which is a mistake, right? So call to action at this point is look at your portfolio, log into your system, log into Rentastic, and see if you can compute these six matrices. Look at these and see if it makes sense. If you have questions, I'll share an email address. Shoot across your email and we will answer you as soon as we can. If you don't have premium, you can explore the premium um, and see what premium can provide in terms of reporting and things like that. Set some benchmarks, right? If you were in the stock market, you would look at how your stocks are performing. You should do the same with your rental investments. So look at your NOI, make sure they are at least 50%. Look at your cash on cash, see if you can get it up to 8% and above. Look at your total ROI, which is something that you have to take a paper and pencil and do it quickly with all the data you have in Rentastic. So is it more than 15%? Right? Mine are not at 15%, but I would love for them to be there. How often do I do this? Every month? Every quarter? I would go do this. If you can't manage what you don't measure, right? You cannot manage what you don't measure. That's the saying. If you don't measure, you don't know what you're managing. So these six KPIs will transform your real estate investing from hoping your properties perform well to knowing exactly how they perform and why they perform well. So these are in summary, these are the six KPIs: NOI, net operating income, cash on cash, which is the cash performance, market positioning with cap rate, how well am I doing in that area, in that market, gross rent multiplier, this is how many years will I take with this rent to get to the investment that I put in, The CFPU is cash flow per unit, and total ROI is something that you can compute with all the data that you have in Rentastic. The success formula that I want to share, it's the truth, is accurate data. So as long as you have data good in Rentastic, we do the automatic tracking for you. You do the regular analysis like I explained with the 6 KPIs. Then you have do the optimizations. You have the best portfolio. I'll stop here and see if you have any questions, comments. Um, if if you can ask, you can ask now, or if you can think of any questions that comes to your mind, shoot an email to webinar@rentastic.io. We are here to answer those. We are not the experts. We will get the experts to answer you. We are building the community of real estate investors here. Thank you for listening, and these are the KPIs you want to go home with. Look for your emails. We'll send across these slide deck so you can do your homework, start optimizing your KPIs. Thank you for listening.